next year, SUZLON will have been in business for 20 years. The last 5 of which it is working very hard to erase in terms of memory because they've been very difficult years. After 2 years of losses, the company has, for the past 2 quarters, posted an operating profit. During that time, it also replaced near-term foreign bond debt of $540 million approximately with 2019 paper, buying itself some more time to pay back its FCCB holders. And the Modi government's very first budget did its bit to boost wind power in India. Does this then mark a definite turnaround for SUZLON? I have with me Tulsi Tanti, the founder and the chairman of the company, to answer that question. Mr. Tanti, thank you very much for speaking to us here at CNBC-TV18. Let me straight get to the question that I've been wanting to ask you for a long time. Does this mark the turnaround point for SUZLON?
Absolutely right, because the marketplace is so positive and the growth in the global market and domestic market is very, very positive is there. Almost industries is going in a 40% growth in the current year. So that is the good tailwind, I can say. The same time, liability management part of all the legs we have completed.
Right.
The last leg was the FCCB. We have also extended for the next 5 years. And we have taken care of the bondholders very well, and bondholder has supported very well. And as you know, all our debt has gone in a longer period for the 10 years, and first 3 years we don't have a much obligation for the repayment. So on the capital structure point of view, we are comfortable to concentrate on a business and growth and volume side. And same time, the policy environment in the domestic market and global market is so positive for renewable energy. So the growth potentiality is equally good. So it's very clear that for SUZLON is now standing excellent opportunity for the turnaround.
Okay, I want to test that hypothesis a bit, because you as of yet have had only 2 quarters of operating profits, not even a net profit. You're still in a net loss situation. That is a reality your investors have to face. Not just that, Q4 and Q1, Q4 of the last financial year and the first quarter of this year, which has just gotten done and the earnings have just been announced, they've not really been comparable in the sense that Q1 has been far worse than Q4. So whether you look at revenues, which have dropped Q1 to Q4, you've seen a big drop in EBITDA Q1 to Q4. Net working capital, on which you work so hard to bring those numbers down, has almost doubled back to about 6%. Still far lower than some of your peak net working capital numbers, which were 13%, but still back doubled to 6%. Net debt has gone up by about 400 crore rupees. So I'm curious to know why you feel so confident this is the turnaround time, because your last quarter was not as encouraging as your 4th quarter was of the last fiscal.
I agree, Menaka, but if you see the history of the last 10 years, the Q4 is always the good high volumes.
So it's a seasonal issue entirely?
And Q1 is always a low volumes. Normally, the 10% of the annual volume is coming only in the Q1, not 25%. Okay. So that is all correction is based on that is that. But we have to see in a different way of think, consistently, the Q4 and Q2, irrespective of the lower volumes, we are in a positive EBITDA.
So the quarter that's currently going on?
Yeah, Q1 is a positive. EBITDA is there, but top of that, the most important is the gross margin has improved.
Yes, it has. So it has gone up to 33%, 29 to 33%.
33%. That shows indicators go towards the positive growth.
Okay. How is Q2 doing for you? Is Q1 therefore only a seasonal aberration? Yeah. Q2 will come closer to the performance of Q4?
No,
or will we have to wait another couple of quarters to see the performance
normally it's a Q1 and Q2 is a lower volume. Okay. Because Q2 again is a monsoon years for us.
So you're preparing investors saying numbers for this current quarter will also not look very good, but it's not an indication of how optimistic you are of the business.
But always H2 will be the great H2 will be the better. Okay. So the Q3 and Q4 compared to the last year, it will be far better also.
Okay, I want some numbers on your order book position currently, because it was for FY14, the 4th quarter, I think you were at 4.9 GW, and it has, so your current quarter is 4.9 GW, and your 4th quarter was 5.3. Yes. I'm guessing some amount of that reduction is attributable to completion of projects, right? Where do you stand right now on the order book position? Is it increasing, or are you only right now seeing all standing projects get completed and therefore a depletion in the headline number?
No, the Q4 was intake was high and execution was low. Okay. Where Q1 is other way around, intake was low and execution was high. Okay. So it is a normal quarter by quarter.
So where do you stand in your order book right now, sir?
So $7 billion, it's nearly 4,900 megawatt, is 5,000 megawatt order book is there. We strongly believe in this financial year it will continue to this level. And there is a chance for the improvement because the domestic market has come out with the right policy framework. So it will increase end of the year. Again, it's above the $7 billion.
Okay, so in FY14, just to be clear, in fact, your new orders declined 33%. You're saying that situation is going to change in FY15. You're actually going to see an increase in new orders and a substantial one at that, though more likely in the second half than in the first half.
No, second half, the new order intake will increase. But simultaneously, we are executing. So net impact, it will remain above the $7 billion order book.
Okay.
So it will not reduce further.
Let's talk about your debt restructuring, or rather operational efficiencies and debt restructuring. You mentioned the increase in gross profit margins to about 33%.
Yes.
This is first quarter versus year-on-year quarter. How much further can you go in terms of squeezing out operational efficiencies, improving working capital ratios and all of that?
No, working capital ratio is currently, it's a 6, where the industry's average standard is 10%.
But you had gone down to about 3.4.
Yeah, we have gone down because we have reduced that drastically to make a high degree of the operational efficiency. Now we have to again ramp up the volume. So it will increase little bit, but not more than 10%. It will remain below that, the 6 to 8% level, which is a very good average standard of the industries.
Okay.
So the working capital, I am not concerned about that is because our priority to increase the volume.
Okay.
If we can increase the volume, gross profit margin, already we have achieved the good level, 33%, it will go 35%. Now concentration on a EBIT positive.
Okay.
We are EBITDA positive is there. Now we are going to the EBIT positive. And end of this financial year, we are targeting to PAT positive.
So you're going to end FY15 with a net profit? In
a quarter basis, not in a full year basis.
Q4 FY15 will be a net profit?
Net profit basis, that is our target, because during that period, we are also planning to reduce some our interest cost also.
How are you going to do that? Because you're dealing with something like
structure
some over 500 crores in interest costs. So how capital structure optimization, what's left to do? Because you've done some part of what you needed to do under the CDR. Some asset sales are still pending, which I think you've set a timeline saying roughly about 1,000 crores of asset sales through the course of this year.
Absolutely.
You've done your FCCB restructuring. How are you going to now reduce interest costs?
So now the
big burden for you.
Yeah, major focus is 8,000 crore rupees is our rupee debt is there.
Yes.
Which is a high cost of fund is there. So the 50% we are planning to swap by the low cost of the debt and to reduce the rupee debt.
So you're going to refinance the rupee debt with dollar debt?
Not directly refinancing that, because we have an opportunity to borrow the other side of the country. So we can raise the fund there in a debt, because the Senvion doesn't have any types of the debt in their books.
But you've attempted to do this before, and Senvion's lenders, Senvion's other stakeholders have not been very...
both side of the bankers, we are taking on a board to work together to make that happen, because otherwise it was earlier not possible.
So you're going to borrow money, using Senvion at a lower rate, and try and replace that with some of the high-cost debt that you currently have on the books?
Partly will be done by that, and partly we are planning to take it to the company, into the capital market and raising the equity. So partly will be done.
So you're going to list Senvion?
Yeah, that's our plan.
So talk me through the plan of listing Senvion, how much you hope to realize in terms of a stake sale in Senvion?
So our plan is to consolidate the business so that we can make Senvion more competitive in a global front. Currently, Senvion is more concentrated on a European market base. So we are expanding his geography this financial year by adding the more markets. So consolidation is the business of the group is most important, step one. Step two, raise the debt on a Senvion side and reduce the rupee debt on a SUZLON'S side. The step number 3, taking to the Senvion on a capital market, raising the equity in the current financial year and reduce the rupee debt. So plan is there, end of the year, we want to target to reduce our rupee debt completely.
So how much do you intend to extinguish using equity? What is your goal or target as of now?
Equity, as per the LSE regulation, is 25%.
And your expected valuation for Senvion is 2 billion
euros. 2 billion is a minimum.
2 billion euros.
2 billion euros is there. So the 25%, 500 million euros, we can able to raise.
What is the timeline for when you expect to list Senvion?
This is the steps we have to follow. One is the consolidations, then second is the debt raising, and the third is to the capital market. So it takes at least the 6 to 9 months. The target is the current financial year.
What do you mean by adding markets? So are you going to transfer some businesses from SUZLON to Senvion, and through that also realize some money? Is that how you're looking at it?
There is two ways there, because the Senvion is currently, it's concentrating some of the market. As you see, the last 3 years, we have transferred the business of the Australia and Canada and some of the European market.
So these were businesses you transferred from SUZLON to Senvion?
Yeah, not transfer directly, we can say. The Senvion has started the business based on the SUZLON platform. Okay. So that they have started and we have reduced because of the liquidity constraint. We have concentrated more in Indian market and they can concentrate on a developed economy market. Okay. So now the plan is they should start entering into emerging market where there is an established platform of the SUZLON is there, like in Brazil and South Africa market. Okay. So they can start of that, increase the volume on those market. Okay. So it's become a more global organization, and the operations of the group, it's consolidation on a technology front, on a supply chain front, on a market front.
Okay. So how do you avoid cannibalization of some sort?
No, it's because...
I mean, will the gains of growth in these markets come to SUZLON? Will it come to Senvion and to SUZLON through Senvion?
No, both will come because the 2 megawatt segment is SUZLON is there.
Right, and the larger ones is Senvion.
3 megawatt product segment is Senvion is there, where market need both the product portfolio. Okay. So we'll share that the market in that category. So we'll increase the collective market shares very strongly. Okay. But the current priority for SUZLON is the high concentration on Indian markets only. Because limited working capitals what we have, we want to utilize in a smaller cycles of the turnaround of the business, because Indian market is 9-month cycle time is there.
How much debt do you intend to raise on Senvion's books currently to be able to use that debt, transfer it here to the parent company and pay back some of the parent company's
loans? It's not decided yet the size, because it will be the bankers working on that based on the current year EBITDA. Normally 2.5 times of the debt we can able to raise that. So that's the structure currently the bank is working. So that plan will be
roughly what numbers are you working with in terms of the debt, the amount of debt you would like to raise?
No, approximately it's possible 400 to 500 million euros.
400 to 500 million euros. So that's the debt you'll raise on the Senvion books in order to pay back some of the more expensive rupee debt here in SUZLON. And there is no regulatory bar in you being able to do this,
it's subject
nor are you likely to see any lender backlash.
Subject to both the bankers' agreement. That is the current discussions.
Both the bankers as in Indian bankers and the foreign bankers?
Indian banks and foreign bankers should be on board on that.
Why should the foreign bankers agree to do this for the Indian bankers?
At the same time, it's enhancing the business also, and structuring is going very well. If you see the last March when we have done the bond line facility which we have, it is called non-fund facilities. Yes. The earlier group of banks was most of the regional banks.
Yeah, I know.
Now
you've expanded your portfolio of
global banks. Now those global banks understand the capital structure value for the group and value for the Senvions.
So this debt raising on the Senvion's books in this financial year, the listing of Senvion in this, have you started paperwork with the LSE already in terms of filings, etc.?
Not possible yet, because it's a stepwise is required. Okay. So this financial year, both the transaction will be complete.
And through both, you expect to release about €1 billion?
Yes.
And you will use that to extinguish all your India debt currently that you have, which is roughly...
Rupee debt only.
Rupee debt, I get it, because the FCCB debt has been restructured anyways.
FCCB anyway restructured, and the FCCB holder has a good opportunity to convert into equity.
So working, since you work these numbers out, and I'm not so quick at math at this point, your current interest burden on a quarterly basis is somewhere in the region of 537 crores. This was as per the last quarter.
It's an average.
So how much will it come down by the end of this year, fourth quarter, which is the quarter that you expect to post a profit?
It's not quarter, but annual basis point of view, it is nearly 1,000 crores interest reduction. So quarterly, it's 250 crores.
So you intend to come down to how much in fourth quarter? 250 crores.
250 crore will reduce.
250 crores will reduce. Reduction, so you'll be down to about 250, another 250 crores in your interest payment.
So it will reduce. So that will help us. One side, I will improve the EBITDA side, improve the EBIT side, and reduce the interest side, so I can able to go to the PAT positive.
So I want to talk about growth, but before that, what is the timeline on your roughly 1,000 crores of asset sales still pending as part of your CDR?
That is ongoing.
So what have you identified what exactly you're selling, and when do you intend to do these transactions?
No, that is ongoing. As you know, we have sold out the Edison, our asset in the US market, and we have bring a $90 million, and China
and you've done
also
the China stake sale,
the 40 million. So that has also come.
So what is left to sell now? What are you intending to sell?
Manufacturing capacity in India, which is a good real estate value now, it's there, and which we also don't require because it's for the earlier plan for the smaller turbine. Now we are going a bigger turbine, and we are putting some new capacity. So that the plant will be removed, and some of the component manufacturing facilities we have, that also we have to remove. So this current financial year, our plan to reduce another 1,000 crore asset sales. So that will also give the benefit to the either operations requirement or for the debt reduction.